people are familiar with the concept of startups. Obviously, shows like Shark Tanks have helped, or the access to what the government is doing through Startup India and DPIIT has helped. Policies are becoming more favorable. You're seeing many startup founders that are successful. So many more people are saying, okay, if he can do it or she can do it, I can do it. So there is a desire on part of the youth to really start up.
Hey everyone, this is Prashant and I'll be your host for the VC10X podcast. And today we have Alka Goel with us. Alka is a founding partner at Alkemi Growth Capital, where they are on a mission to elevate the health and well being of the Indian consumer while maximizing returns to their shareholders. In this episode, we talk about Alka's story and how she started investing, evolution of the Indian startup ecosystem over the years, common mistakes that founders make while approaching VCs, her biggest learning as a VC, and lots more. So without wasting any time, let's dive straight in. Hey Alka, so good to have you on the VC10X podcast. How are you doing?
Thank you. Thank you, Prashant. Lovely to be here. And I hope I'm looking forward to a very thrilling conversation and hopefully useful to your audience.
Absolutely. So let's get things started. So first things first, can we have your story and how you started investing?
Wow. I'll give you a short form version of my story. I mean, actually, at the core of it is growing up in the 80s and 90s. Education was the only way out, and careers were limited. And I was fortunate to have a family that really supported girl child education. And of course, the onus of performance was on me. And there wasn't that much information that is available today. So I don't even think VC investing was front and center of what I should be doing when I'm 40. But I was fortunate enough to go to business school where you interact with peers. So I graduated from IIM Ahmedabad in 2000 and met fantastic people, faculty, people who were coming for placement, and took the best thing, which I still believe was very fundamental in shaping who I am today. Joined McKinsey from campus, learned the ropes of business there by working with, I don't know, 350, 400 companies during the course of my 17 years at McKinsey. And as part of McKinsey, I was serving a lot of private equity clients. Frankly, if you asked me in 2000, I didn't even know what it was. So, the advice that people say you should know what you want, frankly, that wasn't me. I just kept growing. You do one thing and you learn about something, but one thing I was learning about was business. I was learning about decision making. I was learning about investing, because a lot of my clients were doing M&A and they were doing investing directly. I really liked that world. I really liked the pace at which it works, the intellectual stimulation, the decisions, the track record is there for everyone to see. And I wondered if I would do that. So it came as a somewhat of a thought, I think, in my mind around 2014, 2015. And then you, of course, think about it, you weigh the pros and cons. I was living in New York City, and I do believe it is India's decade, and frankly, not even decade, but probably more than multi-decades. And my family was here, decided to come back and essentially extend what I was doing as a consultant, and put my money and my shareholders' money to where I thought were good decisions. So that's how I got into investing.
Right. That's very interesting. And I can only wonder how different it was being a woman GP back then, because even now we don't have as many female GPs as we should, right? And we want to promote that even today. So I just wonder how many female GPs were there back in the day when you started doing this. So can you give us an insight into that, and how were you interacting with other GPs, and were all of them all male? So would love an insight into that.
This is a question that comes up pretty much in every business profession. Why aren't there enough women? Be it banking, consulting, corporate jobs, this is a question. And of course, VC, because it is a much younger industry, the number of GPs are limited. And I'm hoping I can be one of the examples that can probably inspire more. So, of course, you're right. Even today, the number is abysmally low, but it is increasing. So there's a ray of hope, and frankly, more and more people excited about it. So at that time, there were very few. You can count them on your fingertips. I was seeing more and more women being hired into VC roles at younger positions. So that was definitely happening. But as GPs, very few. I think the number is from such a small base has just quadrupled. So that's very nice. And I hope I can see that more. But I just took it in my stride. You had investors believing in you. You had something different to offer, and I just hope and I'm pretty sure we will deliver, which will hopefully lay the foundation for many others.
Absolutely, and love that you're leading the way in that. And now let's talk about Alchemy Ventures, right? So, what are you trying to do here, and what's the investment thesis?
I think at the core of it, we want to be the catalyst for, I would say, health and consumer wellness companies that have the potential to disrupt at scale and be self-sustaining, and in the process create value for our shareholders. I would be delighted if at the end of 10 years I can say that Alchemy was an important catalyst to at least 10 to 12 companies that have become leaders in their own space. So that's more the vision, broad vision. You want to acquire preeminence. You want to be a sought after investor. You want to make a difference to young companies and be that, create that momentum for them, which they very much need in their early stages to become the best. Become part of folklore, become part of a reality in the sense of moment of pride, for India.
Right, absolutely. So, I believe you're mostly investing in Indian startup. Is that correct?
Yes, yes, yes. I have a very firm belief that you need to be near the center of gravity of where you're investing, because that's how, at least in early stage, you got to know the people. Sourcing plays a very important role. You have to have the ability to do the diligence, handhold where necessary, and therefore location matters. I find it very difficult in early stages to work from distance, because you really can't, the way you would invest in the US, and the context there is very, very different than in India, or even frankly, for that matter, Indonesia. So you have to have teams that are fully dedicated in a place, in a location, to really understand what's going on in the ground, on the ground floor. So it is which is why I shifted base from New York to India, because I firmly believe you got to be where the action's happening, and where you intend to deploy capital.
Yeah, totally. And you mentioned about diligence. So, how do you look at these all these different companies that are coming to you and then come to investment decision? What are the kind of things you're looking at?
At the core, I mean, it's at the core. It may not sound that complicated. Um, it is. It is not actually. It is not that complicated. You're looking at the industry it's participating in. The good news is we are healthcare and consumer wellness investors, so we typically have a thesis proactively built out on each aspect of the areas we want to participate in. We're quite detailed about it. So we look at the industry structure, not today, but where it would be 5 years later, because that's when the company has to, almost try and imagine what the next 5 to 7 years for that industry subsector are going to be it in terms of growth, competitive intensity, margin structures, regulation, innovation. So at one end, you're trying to get a lay of the land of the industry context. You obviously want to look at company traction. Where have they reached? Have they delivered product market fit? Are their customers happy? Is there repeat usage? What are the margin structures? How has the team come together? So you look at the company, pretty much from a 360 point of view, depending upon if IP is important, how defensible is the IP, if regulations are important, what could disrupt the scene, what is it, what are the tailwinds that the company is taking advantage of, and in that tailwind, how is it positioned to get more benefit than the average company. We at the early stage, because we're early stage investors, founding teams become very, very core, as you can imagine. You can put 5 teams to work, and why is one team more successful? It's it's frankly in any sphere of life. 5 people maybe attempting to do the same thing. Why is one team likely to succeed more? And frankly, there is something called the X factor. Very, very hard to assess scientifically, though one tries to. One looks at, of course, price value combinations, because one has a sense of, our business is to raise money, deploy that, and then return that money. So you're also looking at price value expectations. One does look at the exit environment and the governance rights that we will get, which are pretty sacrosanct to us. So it's a fairly robust sort of view that one looks at, from industry, from company traction, from teams, from the price value sort of matching, exitability, and then of course you look at the governance rights and the state of governance, corporate governance.
Absolutely. And you mentioned how one team can win and in front of another team which is maybe doing the same thing. And what's the factor that usually decides that who's going to win, right? Of the two teams, or maybe three or four players in the same market. How do you determine that, okay, this team has it in them to make it big and win this market?
I wish, if you give me that answer as a equation, fixed mathematical equation, I would genuinely do anything to have that. It is not as straightforward. There is human components involved, but I can broadly say there are a few characteristics that are essential. Now, how you assess those characteristics is where the art and science collide, and at some point you have to take a leap of faith in any decision. But I would say a few characteristics that you try and look at is a mindset of a solution orientation. Everyone can point to problems, but does the person or the team have a view to find a solution to obstacles? It's a very important aspect of it. The second is skin in the game. How vested is the founding team? Are they thinking of, let's try it for a couple of years and then we'll see what happens? What are the in weird ways sacrifices they are making? Not always time, but what are they willing to do? What extent are they willing to do to make this vision of theirs come true? The third, I would say, is it's hustle. People get affected by rejection, and how do you deal with that? Do you strive to make your product better when you get negative feedback or rejection, or you find fault with the person who's rejecting you, right? What is that mindset of hustle and not giving up? I think there is someone who told me that a founder goes through multiple emotions in a day, the highs and the lows and all of that. And how do you deal with that emotional volatility? There is some maturity required there, so you try and get a sense of resilience and grit. Now, again, these are not very easy attributes to take an Excel sheet on. Their ability to build and inspire a team, attract talent, is clearly an important one. Their self awareness. Sometimes you meet people who are, just like, I'm good at everything, and not self aware of their pluses and minuses, and how they're going to complement that. Because how do they react to feedback? Does it get defensive or openness? And how do you figure out a constructive way to move forward? But at the same time, having conviction in your own ideas. So it's not to say, hey, someone's giving you feedback, that feedback is better, but at least are you hearing them out and saying logically, rationally explaining why it will not work, as opposed to an emotional response to that. So there are many attributes. You can describe it in a in any relationship, be it in a personal relationship, be it in a professional relationship. Ultimately, you want to hire talent that will have certain attributes. Sometimes it will not work out. Ours is a business of risk. We are taking risk. There is failure that is inherent to our business. We're just trying to increase the odds of success. That's all we're doing. So That's how you try and look at people.
Yeah. Yeah, totally agree. And those are all very valid and very real characteristics, right? That a VC needs to pay attention on while making the investment, because at the end of the day, it'll come down to, can that team or the founding team survive all the turmoil that comes with starting a business and running it, right? And managing that volatility, basically, right? And now also let's talk about some of your portfolio companies. So would you like to mention any companies doing exciting work that our audience should know about?
Honestly, it's a vast array. We have invested in medical devices, pharmacies, ad tech, consumer networks for doctors, healthy snacking, diagnostics, feminine hygiene. I think all of these areas, to some extent, have the natural tailwinds, are large markets in itself. Of course, there's unique uh, 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 sort of dimensions to each of them. So the areas we have invested in are very, very vast. Because healthcare and consumer itself is a very vast segment. And each of them, in their way, are trying to disrupt the way things are done. So, for example, we all know the challenges faced with affordability and accessibility of healthcare. So, Health Cube is providing a very simple, portable point of care device that you can measure 30 parameters on, be it infectious diseases, vitals, biochemistry. Very, very useful. If you take the other extreme of dog care, which is essentially an ad tech platform in its simplest way, which is trying to provide healthcare companies to monetize their inventory, ad inventory with pharmaceutical agencies and pharmaceutical manufacturers. Whereas you look at Redcliffe, which is really becoming a national diagnostics pathology chain with an edge in patient acquisitions, right? All areas, again, I mean, MedCart, they are providing generic medicines and saving people millions of dollars per year, patients, because they get access to chemically equivalent generic medicines. So you can see the variety. I've just rattled off a few. It's hard to name all, but rattled off a few.
Those are all very exciting companies, and I'll try to link them all in the show notes so that our listeners can go and check them out. Besides, let's talk about startup trends. So, are there any trends that you're seeing in the ecosystem uh, that you are excited by and would like to talk about here?
Trends or fads, right? There's a difference.
Yeah.
Look, fundamentally, um, if I look at a secular 10-year, because sort of time gap, because that's the shortest way to get real fundamental trends, as opposed to what happened in 21 versus 22 and 23, because those become more like they come and go, and one may get the wrong impression. So I think people are familiar with the concept of startups. Obviously, shows like Shark Tanks have helped, or to access to what the government is doing through Startup India and DPIIT has helped. Policies are becoming more favorable. You're seeing many startup founders that are successful. So many more people are saying, okay, if he can do it or she can do it, I can do it. So there is a desire on part of the youth to really start up, which is a very good uh, trend for a country like India, right? Secondly, as I was mentioning, people are understanding financing of startups much better. Today, you see founders come to us very well prepared on the terms, their understanding of how VC fundraising works, all of that. So that education, which was happening in from the 2008, 6 to 2012 time frame, is required much less. It is seeping down, permeating to multiple cities, even though the lion's share is still in Bangalore, Delhi, and Mumbai, but other cities are coming up, it's catching up. So the culture of startups is much more accepted. It is seen as a legit profession, if I can call it that. Um, and jokes have been made about if an entrepreneur is now a plus on your resume. But I just would caution folks is you are signing up for at least 8 to 10 years, if not more, of consistent hard work, persistence, up and down when you think of starting up. It's not like startups did not exist prior. Of course, many of the most credible business houses in India all launched in the 70s, 80s, and today they are behemoths and, or even 90s. It happened, but the pace at which it is happening is multiplying, and the middle class is also realizing that there is a way for them to create wealth in one generation.
Right, absolutely, and I totally agree to that because when I was a child, or maybe in my high school years, I used to tell my parents that I want to go into business. I want to be a businessman, right? And they would say, choose a normal profession because we don't belong to a business family. Uh, so that was the perception back then, and I'm talking about 4 to 5 years back from today. That families
You're
usually,
very young.
yeah, I'm 23, right? So that's how the perception was, that you need to be from a business family to be able to do business, right? And I think over the past maybe 1 or 2 years, that perception has drastically changed, right? And
Dramatically,
yeah,
I would say over the last 4 5 years it
yeah,
has dramatically changed,
yeah,
because now you can piece together people, capital.
hmm,
Obviously the regulatory environment has become easier as opposed to the license raj of the 80s and 90s, so it's all going in the right direction.
hmm, certainly, totally agree. And I think and how this was even accelerated with Shark Tank coming in and it reaching households and everyone knowing that okay, startups are something that you can do. And even the founders that are featured, some of them are coming from rural backgrounds. So it just goes to say the fact that every part of India can do business. Every kind of person can do business in India, right? And
Absolutely. And
yeah,
I think one of the other things is, obviously not all businesses are suited to VC capital.
exactly,
So I would
exactly.
like to caution that.
Hmm.
But it's obviously Shark Tank being one, but even media is covering all,
Right.
whether it's traditional media, whether it's podcasts like yourself,
Hmm.
there's massive sort of publicity. I mean, if you look at the speeches the leadership is making of the country, they talk about startups and unicorns and FDI. You got Invest India as a platform. So even from the government machinery, I mean, it all has to come together, right? And people's unlocking people's aspirations is all coming together, and it is becoming a source of pride.
Yeah, I totally agree. And every Indian, more or less, whether they are in whichever income bracket, right, tier one, tier two, tier three, right, they are always interacting with some kind of startup in some way or the other, right? We call it Paytm or Phone Pay. Like these vendors, street vendors, all have these boxes of with QR codes that you can make these payments. And I love the kind of penetration the ecosystem has been able to achieve, right? Even in people who are not that educated, they are reaping the benefits of it, right? That's
And
incredible.
digitization has had a lot to do with it,
Yeah,
right? Because today, anyone sitting in any part of India, because the data is so cheap, can consume the information. The information is coming directly from the horse's mouth. So you've sort of democratized knowledge, right? I mean, which is a very, very important part. Initially, knowledge was restricted to the elite and people who had access to those networks. Today, I mean, you go to YouTube or you got that, and it's on your phone. And most people, I mean, India has the reputation of being lowest cost in data, so that's made a huge difference. Yes.
exactly, totally agree. And now let's talk about the most common mistakes that you see entrepreneurs or founders making when they are approaching VCs.
I think a couple of things actually. um, Really not anticipating, every business plan I see goes like a hockey stick, right? I mean, just really thinking through what could go wrong, really understanding the costs that will be involved, assuming perpetual decreases and perpetual increases. It just doesn't work like that. So having a little bit of realism baked into the business plan, and I think business plan is there for us to understand how founders think. So can they defend it? I would encourage at least Series A, Series A founders to actually do the business plan themselves, as opposed to rely on a third party, because it is not the numbers and the outcome as much. It is really the quality of thinking that has gone into making the business plan. What are the assumptions they have used, and why do they believe something will work out like this versus another way? Have they assumed any increase in competitive intensity? Have they assumed pricing will continue to go forever up? Have they assumed expenses are going to be flat? It just talks about the quality and rigor of their thinking, which is very, very important. So sometimes I see some of this completely being outsourced at very early stages to a third party, which I don't think is a good idea. You need to own the business plan. And by owning the business plan is really quality of thinking. I think secondly is alignment between founders on priorities, who's responsible for what, etc. So sometimes it comes across as disjointed, uh, which um, which doesn't bode well, because you're thinking, hey, is the small team aligned? Because if the small team is not aligned, how do you get other people aligned on what winning looks like, what success looks like, what are your priorities, how are you going to manage time, how are you going to resource allocate? So sometimes it's mistakes. I would say sometimes not giving enough thought to alignment between founders. I think even when it comes to term sheets, really focusing so much on, of course, valuations are important, and I get it from the founder's point of view, why it's important, but being realistic, right? Because I mean, everyone is speaking about the 2021, when insane valuations were happening for SaaS companies, or frankly, any most sectors, and most entrepreneurs expect that's the reality. You got to do. I mean, ultimately, public markets are a good test of reality. So, not trying to say, "Hey, let me get a very high valuation now," because it'll come back and haunt you later. Now, it takes a lot of maturity and, frankly, courage, because who wants to leave money that dilutes people less? So, I think it's being a little bit thinking 3 5 years out, as opposed to being very short-sighted about it. I think there is a balance entrepreneurs need to make between optimism and reality. Of course, optimism drives them. You need that, because there has to be this intent of winning against all odds and figuring a way out. But there's also, you can't be sort of just shielded from what else is happening, right? What could affect you? So, what could completely disrupt this business model? If you're trying to disrupt someone else, someone may disrupt you as well. So, being very conscious of that. I just rattled some off. I'm happy to go more into detail, but at least gives people a glimpse.
Yeah, certainly does. And that's very important point there, that the valuation, even if you get a higher valuation, you might think that that's a win, but that can actually come back to haunt you, like you said. And that we are seeing some of that happen right now in a downturn, right? Because some startups raised previously at a really high valuation, and now in a downturn they're not able to justify that, and now they're wondering, should we raise a down round or not? And that's
And honestly, there are investors to blame for it as well,
mhm,
because the investors themselves offered that and set those benchmarks. So
right.
that became the reality, because the
Hmm.
founder will think, hey, if there's a willing buyer to
Hmm.
do this, there must be value in it. So
Right.
I think the investor community also needs to shoulder this responsibility.
Yeah, totally agree to that. Yeah, but maybe the investors don't bear the brunt of it, as the founders do actually, because they are the ones who are facing the stress that, okay, I don't want to raise a down round, puts the company in a bad light, and then when I go to raise,
Actually, that's not true. Investors bear the brunt, because if you're having down round, the
mhm.
value of your stake reduces. So,
Yeah, got it.
um,
Yeah, makes sense.
and you have to do a lot of explaining to your shareholders why and how.
Hmm.
And it's not easy. There's a lot of conflict.
Hmm.
There's a lot of headache for investors to get everyone aligned and move the company forward.
Hmm.
So, I don't think you can say the founder bears more of the brunt.
Hmm.
Is the investors equally, because they
Yeah.
also have shareholders who they
Exactly.
answer.
Agreed. 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 I stand corrected. Right. Great. So now let's move on to my last main question before we move on to the last rapid fire round. So this one is about What's something that you've learned now that you wish you had learned at the start of your venture career?
You know, you know the theory of the learnings, but till you live those learnings yourself, you just don't internalize it. So I wouldn't say that there's been a massive revelation of learnings, but it's been really, sort of uh, internalized. It's been really like, hey, this stuff is real, right? It's so. For instance, I mean, as I was speaking earlier, VCs have a portfolio. By definition, some will fail and some will deliver. I think really knowing that and adopting that mindset will should save you a lot of heartache. Saying, this is the business we are in, so a portfolio will behave like that. You can't come from a school of thought that, hey, everything I do would be super successful, right? It just doesn't work like that, and that's why you have a portfolio. um, so that's one. There's certain things, external factors play a role. As minority investors, there's beyond a point, there's limited influence, limited ability, because COVID came, the Russia-Ukraine war happened, the inflation came, the interest rates came, regulations came, and startups are fragile. Any of these could actually be a boon or a bane. It has nothing to do with the, uh, all the diligence you may have done, right? To So it's a little bit of not discounting the external factors. You can't bake every scenario
Right.
in your planning. You just have to say, okay, I bet on this secular trend and I bet on this team. It will come together and some of it will fail. Right. I mean, that's sort of the mindset,
Right.
as opposed to I can try and control every outcome. That doesn't happen. Um, uh, I think those will be the couple of big learnings, I would say.
Right.
I mean, there's a ton of other things
Hmm.
which is more tactical,
Yeah.
but really the philosophy of it. I think as also as healthcare investors, uh, we do believe that our ability to act with conviction is much higher, right? That was a big learning, that at least we knew theoretically that focused funds, focused expertise can actually deliver well, and that we're seeing. So,
Yeah, yeah, I totally agree with that. A lot of things are not in our control, and like we recently also saw with the SVB case, even though that was tackled, but that actually put a lot of startups under a lot of stress, a lot of VCs under a lot of stress. That what's going to happen now. Eventually, it was all tackled, but yeah, there was another example of how external factors can play a role if a startup works or not, right? So now let's move on to the final round of rapid fire questions. So I'll ask you five quick questions about the fund, and you have to give five quick answers. Sounds good?
okay, super. Let's go for it.
All right, so the first one is, what are the sectors and regions you invest in?
So, ours is India, healthcare, consumer wellness.
Great. And what's the typical stage of investment?
Pre Series A, Series A with some flexibility around the edges.
And what's the typical check size?
We can do anywhere from 1 to 5, median of 3 to 4
Million, right?
million USD.
Yeah.
Yes,
And where can founders apply in case there is a direct way?
absolutely. There's always direct way. There's, in this day and age, there's so many ways. Whether it's LinkedIn, whether it's our say hello at Alkemi VP, whether it's going to our website. All our team is listed there. You reach out to any. So it's very easy. I mean, in this day and age, it'd be really unfortunate if people can't reach us.
Yeah, that's great. I just some VCs prefer warm interest. That's why I ask it that way. But let's move on to the last one, which is, where can our founders follow you?
So I'm not very active, honestly, on Twitter or LinkedIn. I mean, I do have a LinkedIn profile and I do have a Twitter profile. So I at always Alka Goel, but I'm not the most social media active person, at least a prolific writer, though I have a lot of views. But LinkedIn and I'd always Alka Goel.
Right. So podcasts are the place to find you, right? Great. So I'll put all those links in the show notes below so that our listeners can follow you and check out what you're doing at Alkemi. Thank you so much for coming on and happy investing.
Thank you, Prashant. It was lovely. Thank you for doing this. I hope everyone enjoys and love to get feedback.
For sure. Thank you for coming on. Bye bye.